Town Bank Mortgage, NMLS number 512138, is an equal housing lender. This podcast is for informational purposes only. And now, the man born with a 5 o'clock shadow and with the NMLS number 2028-201. He is a gentleman. He is a scholar. He is
Tyler Cralle.
Oh my gosh. I'm doing a show on Fed Day. I never do that. Even though it's kind of funny, is like in this business, I should always only do a show on Fed Day. I always seem to miss one, but here we are doing the show. Welcome everyone to the Wednesday edition of Wilmington Mortgage. I am the aforementioned host of this podcast, Tyler Cralle, of course, loan officer, Town Bank Mortgage, right here in Wilmington, North Carolina, where we break down the top stories impacting rates every single day, assuming my voice holds up, which it's getting better. It's getting better by the day, as you can tell. I'm not straining it. No cigars. I am living a very pure lifestyle right now. So keeping my voice going strong. But it is Fed Day. We got a Fed decision. Markets are reacting, and kind of as expected. I was talking to some colleagues, and they were asking me what my opinion was, and my opinion was I would lock any loan you're thinking about before, because this could not be, more than likely it's not going to be great for rates. I mean, I think this has been sort of the pattern for Fed meetings where rates fall going into a Fed meeting and then they jump after the Fed meeting, like regardless of what actually happens. I think maybe one time did rates rise going into a Fed meeting, but the same thing happened. We had good Monday, good Tuesday. Things were not bad. Actually, this morning we got a PPI report, producer prices, that was not good. Rates kind of reversed up a little bit, and then we had the announcement from the Fed, and then the Powell press conference, which was not very good, and markets went red across the board. Equity markets are down, and like I said, bond yields are up. Looking at it right now, the 10-year's up about a little bit over 6 basis points. So we're back to about 4.26%. And Mortgage News Daily, which is always like kind of delayed with regards to the 30-year fixed. They had the 30-year fixed. Their index was up just 2 basis points at 6.31%. But I'm going to guess that tomorrow we're going to see another. I think they only update it like once a day, I think. And so more than likely that number's probably going to rise tomorrow as well. But rates are up. I mean, nothing horrible. But they did rise. So why did they rise? All right. So what was kind of surprising was the statement from the Federal Open Market Committee, who makes the decision, was actually kind of dovish. I mean, I was watching Bloomberg, and they were very surprised at how there just wasn't a lot of change. I mean, the only thing that actually changed between once again, the benchmark rate was held between 3.5 and 3 3/4. That was unchanged from January, and of course, also unchanged when they dropped it in December, the final rate cut of 25. The only major difference in the statement, so they had the statement they released announcing what they're going to do with rates. The only change was they added that the implications of developments in the Middle East for the U.S. economy are uncertain, and that was it. I think there was also like a little bit of a change to prices, but it wasn't anything major. I mean, you thought you'd see more changes, and there wasn't. And if you remember yesterday on the show, we talked about Nick Timmeros, aka the Fed Whisperer, who noted the dot plots, and he was saying that that's probably going to be the big takeaway from the report, and that was not correct. That was not correct. There were changes, but nothing drastic. I mean, for example, PCE inflation, they now have at 2.7% to end 2026. That was up from 2.4% in December. So kind of a big move there. I mean, we're talking about 2.4, 2.7. That's a big move. And what's funny, though, is they have inflation falling back to 2% by 2028. That did not change. So they're expecting slightly hotter 26. I think a very slightly hotter 27, but rates ending 28 at the 2% target, which some people were surprised by. What's interesting, though, is that the inflation projections being higher were kind of offset with growth forecasts also being higher. So the Fed now sees the economy expanding by 2.4% this year, up from 2.3% in December. And they're expecting 2027 to see 2.3% growth versus 2% back in December. So much hotter 27 and a slightly hotter 26, which was kind of surprising. I mean, they thought there might be an increase in inflation because it is being caused by oil shocks, because it is being caused by tariffs, that you wouldn't see that growth being a component, and yet that was up. And then probably the most shocking was their projections on where the Fed funds rate was going to be. No change, zero change. They had the Fed funds rate ending 26, 3.4%, before drifting lower and ending 27 and 28 at 3.1%. So they're still technically penciling in a rate cut this year. So no change. I mean, that's... Nick Timiraos was like, the rate projections could be the thing to watch. And they were not. They were not. Now, Powell did address some of the issues that were not Middle East related. He did sort of reiterate what the statement said, saying, quote, the implications of developments in the Middle East for the U.S. economy are uncertain, which is exactly what the statement said. He did, interestingly enough, he did take a couple shots at tariffs, which is kind of interesting because Powell has definitely addressed tariffs before, has talked about how they are at least short-term inflationary. But this time, I mean, he was kind of really going after them. And I do wonder if there wasn't sort of a political component because, as everyone knows, Donald Trump loves tariffs. And maybe Powell was just really hitting on the tariffs. He did say at one point, he was asked by, I believe, Colby Smith of the New York Times, asked about the sort of persistent inflation above target for the last couple of years. He said, we're well aware of the performance of inflation over the last few years and how a series of shocks have interrupted that progress, pointing to tariffs as one of the recent reasons. Powell added that core inflation remains around 3% with a meaningful portion tied to tariffs. He said it was between 0.5% and 0.75% were tariffs, which would mean if not for tariffs, inflation would be pretty close to target at like 2.25%, which, I mean, it's kind of a big deal. Powell also addressed the ongoing Justice Department investigation. This obviously sort of important. We did have the judge recently toss out the subpoenas against him. But he did say, quote, he had no intention of leaving the board until the investigation is well and truly over with transparency and finality. When asked about his future beyond the investigation, Powell said he has not made a decision, but he would act based on what was best for the institution and the people that the institution serves. Then I think someone asked him about, because we know Tom Tillis has said that he will not back any nominee until the investigation is over. So if the Senate cannot move Warsh, because I think Tillis is on the committee that would, move the nomination forward. If they couldn't get it to a full Senate vote, or if they don't have all the senators to make the vote, Powell did say he would stay on as president pro tem or chair pro tem until his replacement was named. So he did address those issues. But other than that, I mean, Powell was maybe a little less dovish than the statement. And maybe that's why, because rates were still kind of in the range they had been all day. And then after his press conference, I mean, they probably doubled. So it's probably about the 10 years up about 3 basis points. Now it's up about 6. So the market was definitely less happy after Powell's press conference than before, which typically is what happens. I mean, the statement was pretty muted. And that's the purpose of the press conference. So, yeah, I mean, less impactful than I would have thought. The statement being dovish, the dot plots being almost extremely dovish, no changes of any major category, or at least offset by something else, was kind of surprising. And then I was a little also surprised Powell he really seemed to be taking some shots at tariffs. So, all in all, a pretty interesting meeting, interesting press conference, but some surprises. Very dovish statement, very dovish dot plot. So, I guess the next dot plot will be in June, where Powell might be chair or not, might be chair pro tem, and then we'll know if the war's still going on and everything else. But interesting meeting, no doubt. All right, real quick here, let's jump into these PPI numbers. They are horrible. These are producer prices. Jumped 0.7% in February, up from a 0.5% jump in January. Biggest monthly jump since July 25. So it's been a little while. It's the fourth straight hotter reading on a month-over-month basis. I mean, it was like a staircase watching, 0.1, 0.2, 0.3, 0.5. I mean, it was just rising every single month. Not good. Good prices surged 1.1% for the month, the largest increase since August 23, while service prices climbed 0.5%, the third consecutive monthly gain. That's what Powell was talking about with regards to tariffs impacting goods. Now, once again, need to clarify that PPI is not impacted by tariffs, not directly. There can be indirect impacts in that if another person is raising their prices because of tariffs, that can impact another product, and so their prices can rise. And so not directly impacted, but there can be indirect impacts technically in PPI. Year over year, PPI rose to 3.4%, up from 2.9% in January, and that's the highest level since last February. And as I mentioned, services inflation is also firming along with goods, suggesting broad-based price pressure, not just in isolated categories. So we had this PPI report come out, not good, and then the Fed meeting, because I was actually surprised the market took the PPI data as well as it did. I thought there would be a much stronger reaction. I mean, I think the 10-year was down about 2 basis points, and then the PPI came out, and then it was maybe up 2 basis points. I mean, a 4-point move isn't that big, considering how bad that PPI report is. I mean, that's not good. That's bad, especially if that leaks into the CPI over the next couple of months with the oil shocks. That is just a recipe for some issues that would not be good for rates. I will put it that way. All right, we're going to go. My voice seems a little rough. Just noting that. The pollen might be having its impact. All right, but we're done. You guys, I did a show. I did a Fed show. It's been a while since I did that, if ever. You guys enjoy your Wednesday. We'll be back here Thursday for another edition of Wilmington Mortgage. And remember, as always, do not wait to buy real estate. I did the finger thing too quick. Do not wait to buy real estate. You buy real estate and wait.